Hey everyone, welcome back to Corporate Dakota, the place where we unravel corporate filings so you don't have to. Today we're digging into Matinas BioPharma's latest report, and let me tell you, it's a bit of a roller coaster. Hopefully they can pull it together, or else it's game over, or they discuss the latest market moves. This report paints a picture of a company struggling to stay afloat. They are trying to conserve cash and are looking for partners or even a sale. Let's break down the key details to see what's really going on. First, let's jump right into the numbers. These are from their financial statements and give a quick snapshot of the company's health. Looking at the assets, their cash and cash equivalents are about $9 million, a little bit down from $3 million at the end of last year. It is never good when a company's cash decreases, but this one is not too bad. Now, on the other side, their total liabilities are about $5.8 million, which is up compared to $5 million at the end of last year. The liabilities are increasing. Moving on to the condensed consolidated statements of operations. Their net loss was about $1.7 million, which is better than the almost $6 million loss from last year. A big improvement. Their net loss per share was $0.33 versus $1.34 a year, reflecting the company's efforts to decrease the loss. Now, let's talk about the elephant in the room, the company's ability to continue as a going concern. This is basically corporate speak for can they stay in business? The company has an accumulated deficit of $200.5 million. They've been losing money for a while. The auditors basically say that there's substantial doubt about the company's ability to keep operating for the next year unless they get more money. This is not good and should be taken seriously. Scrollability of the company to continue twice as a going concern is dependent upon securing Scroll. To survive, they need to either find a partner to fund their main drug, control their expenses, sell more stock, or get additional financing. All of those are tough options. Let's switch gears and talk warrants. The company issues warrants, which are basically options to buy the company stock at a later date. The company must then assess if these are equity or liability based on a few items. The most important aspect of warrants is that the assessment is re-evaluated each period. The warrant liability is then valued, and they are using level 3 valuation unobservable, which is valued at just over $1 million. The value of these warrants can change, and they change quite a bit based on the inputs of this pricing model. Scroll schedule of leasehold improvements and equipment. Scrolls, the company also has leasehold improvements and equipment, and the company value is around $450,000. Scroll accrued expenses summarized by major category as type in 135. 2025 Scroll. 2 accrued expenses are expenses that the company owes but hasn't paid yet. They are at $1.1 million. The company has various lease agreements, including leases of office space, a laboratory and manufacturing facility, and various equipment. Scrolls. Some leases include purchase, termination, or extension options for 1 or more years. Scroll schedule of maturity of operating Shen finance leases, liabilities. Scroll. Here's a look at how much they have to pay on these leases every year, totaling around $3 million. Now, let's dive into the company's stock structure. This is where things get interesting, as it gives insight into who owns what and what future dilution is coming. Back in August of last year, the company did a reverse stock split of 1 for 50. This basically means every 50 old shares became 1 new share. Companies do this to increase their stock price. Recently, in February of this year, the company sold preferred stock. Now let's take a step back and look at Matinas BioPharma as a whole 10 Scroll. Matinas BioPharma Holdings Inc. Edge Holdings, a Delaware corporation, formed in 2013 Scroll. They are a clinical stage biopharmaceutical company. This section is not applicable. It doesn't have anything that can create insights. It is good to know things are run well from the management side. In the evaluation of disclosure controls and procedures, the company said it was not effective. The company did not maintain an effective internal control environment. This is a big issue that they need to remediate. Now, let's zoom out and assess Matinas BioPharma's overall situation. Their main strength lies in their technology, the LNC platform, but that doesn't mean that they can survive. A big weakness is their financial situation, as it is not good. It can barely keep it up. The most notable risk is that they might not find a partner or more funding, which could force them to make very tough choices. This is a make or break year for them. So what's the bottom line? Matinas BioPharma is facing a lot of challenges, and whether they can overcome these challenges remain to be seen. Alright, that's our analysis of Matinas BioPharma's latest SEC filing. What do you think about their chances of turning things around? Drop your comments below. If you found this valuable, hit that like button and subscribe for more corporate decoder videos. Don't forget to join our Discord community in the description for more engaging discussions. Thanks for watching and see you next time.